Eddie Stobart's green and red lorries once ruled the UK's roads, captivating fans across the nation. But the golden days of this iconic fleet are over. As the transport industry evolves, Eddie Stobart struggles to stay relevant, and those glory days will never return. But what exactly went wrong? Edward Stobart founded the business in 1946 as an agricultural operation in Cumbria. His son, Eddie, shifted the focus to road haulage in 1970, capitalising on Britain's expanding road network. Then in 1973, the iconic green, red and gold livery was introduced, and trucks were named after women as a tribute to Eddie's wife. Afterwards, under William Stobart's leadership in 1976, the company rapidly expanded, becoming a premium logistics provider. The 1990s marked Eddie Stobart's transformation from regional hauler to national icon. The company's fleet exceeded 500 vehicles by 1991. Annual turnover reached £50 million by 1994. But the numbers tell only part of the story. Eddie Stobart had achieved something unprecedented in the logistics industry: genuine brand loyalty and public affection. The Eddie Stobart fan club, established in 1994, attracted thousands of members who collected photographs, model trucks, and memorabilia. The company leaned into this unexpected popularity, producing official merchandise and organising fan events. This wasn't typical corporate strategy for a haulage firm, but Eddie Stobart had never been typical. Channel 4's documentary series Trucks and Trailers debuted in 1999, following Eddie Stobart drivers on their routes across Britain and Europe. The show attracted average audiences of 3 million viewers per episode. A transport documentary drawing those numbers was unheard of, but viewers connected with the drivers' personalities and the behind-the-scenes look at logistics operations. By 2001, the fleet had grown to approximately 850 trucks. The company operated from multiple depots across the UK, handling contracts for major retailers including Tesco. Revenue exceeded £160 million. Eddie Stobart had established itself as one of Britain's largest privately owned logistics companies. William Stobart sold Eddie Stobart Limited to the Westbury Property Fund in 2004 for £137 million. The sale marked the end of family ownership after 58 years. The Stobart family retained the property assets but transferred all operational aspects of the transport business to the new owners. The new ownership structure brought professional management and significant capital for expansion. However, it also introduced pressures that would later prove problematic. The company needed to justify its purchase price through aggressive growth and profit targets. The personal touch that had characterised family ownership began to erode under corporate structures focused on shareholder returns. Eddie Stobart Group floated on the London Stock Exchange in 2007 through a reverse takeover of Westbury Property Fund. The listing valued the company at approximately £130 million. Going public provided access to capital markets, but subjected the company to quarterly reporting requirements and investor expectations that prioritised short-term performance over long-term brand building. The fleet continued expanding, reaching 2,000 vehicles by 2008. The company diversified beyond road transport, acquiring logistics facilities and expanding into warehousing and supply chain management. Annual revenue exceeded £500 million. On paper, Eddie Stobart appeared to be thriving under its new structure. The 2008 financial crisis hit the logistics sector hard. Consumer spending declined, manufacturers reduced production, and transport demand dropped accordingly. Eddie Stobart reported a £2.9 million loss for the 6 months ending May 2009, compared to a £5.4 million profit in the same period the previous year. The company's debt levels, which had grown to fund expansion, became increasingly problematic as revenue declined. Eddie Stobart's debt stood at approximately £200 million by 2010. The company underwent restructuring, closing depots and reducing capacity to align with lower demand. The cuts saved costs, but also reduced the company's operational flexibility and market presence. Management turnover increased during this period. Chief executives came and went as the board searched for leadership that could restore profitability while maintaining growth. Each leadership change brought strategic shifts that disrupted operations and confused employees about the company's direction. The logistics market itself was evolving in ways that challenged Eddie Stobart's traditional model. Online retail was growing rapidly, demanding different distribution approaches than traditional retail supply chains. Customers increasingly valued technology integration, real-time tracking, and data analytics. Eddie Stobart's systems, built for an earlier era, struggled to keep pace with these technological demands. Investment firm DeBay Advisors acquired Eddie Stobart Logistics in 2014 for approximately £280 million. The acquisition was leveraged, meaning DeBay borrowed heavily to fund the purchase. This added further debt to the company's balance sheet. The total debt burden reached approximately £300 million. Under DeBay's ownership, Eddie Stobart pursued an aggressive acquisition strategy. The company acquired the Pallet Network in 2014 for £42.5 million, iForce in 2017 for £52.5 million, and the Speedy Freight Network in 2018. These acquisitions expanded Eddie Stobart's service offerings, but also increased complexity and integration challenges. Revenue grew to £843 million by 2018. The company employed approximately 6,500 people and operated around 2,500 vehicles. However, profitability remained elusive. The company reported losses in multiple years despite revenue growth, raising questions about the viability of its business model. In August 2019, Eddie Stobart Logistics suspended its shares from trading on the London Stock Exchange. The company announced it had discovered potential irregularities in its financial statements requiring investigation. The suspension shocked investors and raised serious questions about corporate governance and financial controls. The investigation revealed that the company had recognised revenue from transactions that did not meet accounting standards. Profit figures had been overstated. The board launched an independent review while management scrambled to assess the true financial position. Eddie Stobart Logistics entered administration in November 2019. The administrators, KPMG, immediately began seeking buyers for the business. The company's debt had reached approximately £513 million. Several potential bidders emerged, but the complex financial structure and operational challenges deterred many interested parties. A consortium, including DeBay Advisors, acquired Eddie Stobart Logistics out of administration in November 2019 for approximately £55 million. The deal eliminated much of the company's debt, but also wiped out existing shareholders. The acquisition price represented a massive discount from the company's earlier valuations, reflecting its deteriorated financial condition. The restructured company emerged with approximately 180 of its 350 million shares held by the consortium. DeBay retained significant influence over strategy and operations. The company delisted from the London Stock Exchange, ending its period as a publicly traded entity. Eddie Stobart Logistics continued operating through the administration process and acquisition. drivers kept making deliveries, depots remained open, and customer contracts continued. However, the reputational damage was severe. The company that had once symbolised reliability and quality had become associated with financial mismanagement and corporate failure. The fleet size declined from its peak of approximately 2,500 vehicles. The company closed facilities and consolidated operations to reduce costs. The focus shifted from growth to survival, with management prioritising cash generation over market expansion. The logistics industry has transformed dramatically since Eddie Stobart's glory days. Technology has become the primary competitive differentiator. Companies like XPO Logistics, DHL Supply Chain, and Wincanton have invested heavily in automated warehouses, artificial intelligence-driven route optimization, and real-time tracking systems that provide customers with unprecedented visibility into their supply chains. Amazon has fundamentally altered logistics expectations. The company operates its own delivery network, sets standards for speed and reliability that other retailers now demand from their logistics providers, and has driven down margins across the industry. Traditional logistics companies must now compete on Amazon's terms or risk losing business. The rise of same-day and next-day delivery has reshaped distribution networks. Customers no longer plan purchases days in advance. They expect immediate fulfillment. This requires logistics companies to maintain inventory closer to end consumers, operate smaller and more numerous distribution centres, and coordinate complex multimodal transport networks. Eddie Stobart's traditional hub-and-spoke model, optimised for efficiency over speed, fits poorly with these demands. European competitors have also expanded aggressively in the UK market. Companies like Norbert Dentressangle, Quaini plus Nagel, and DB Schenker operate at scales that dwarf Eddie Stobart's current footprint. These companies benefit from pan-European networks that provide competitive advantages in cost and flexibility. The driver shortage has hit the UK logistics industry particularly hard. Brexit reduced the available pool of European drivers, while COVID-19 accelerated retirements and career changes. The Road Haulage Association estimated the UK faced a shortage of approximately 100,000 HGV drivers by late 2021. Smaller companies like the restructured Eddie Stobart struggled to compete with larger operators for scarce driver talent. Eddie Stobart's brand value derived from intangible qualities that are difficult to recreate once lost. The company represented quality, reliability, and a certain British pride in craftsmanship. Those associations weakened substantially during the financial troubles and administration. The truck spotting community that once celebrated Eddie Stobart's sightings has largely moved on. While enthusiasts still document trucks, the passion has diminished. Younger generations, raised in an era where Eddie Stobart is associated with corporate failure rather than success, lack the emotional connection that older fans developed. The television documentaries that made Eddie Stobart drivers into minor celebrities are gone. Modern viewers have countless entertainment options, and the novelty of watching truckers has faded. The company's attempts to leverage social media have failed to recreate the organic enthusiasm that characterised its 1990s peak. The practice of naming trucks continues, but it no longer captures public imagination. Other haulage companies have adopted similar practices, diluting Eddie Stobart's distinctiveness. What was once special has become commonplace. Logistics is now a low-margin, capital-intensive business that rewards scale and operational efficiency. Eddie Stobart's business model, which emphasised brand and service quality, cannot generate the returns necessary to compete with larger, more efficient operators. The company's debt burden, while reduced through administration, still constrains strategic options. Investments in technology, fleet renewal, and facility upgrades require capital that the company struggles to generate through operations. Competitors with stronger balance sheets can outspend Eddie Stobart on the innovations necessary to remain competitive. Customer contracts in modern logistics often include penalty clauses for service failures and require significant technology integration. Eddie Stobart must invest to meet these requirements while operating with less financial flexibility than competitors. This creates a competitive disadvantage that compounds over time. The restructured Eddie Stobart operates approximately 2,000 vehicles as of 2024. Revenue has stabilised at approximately £600 million annually. The company remains profitable on an operational basis, but it no longer drives industry trends or sets standards for others to follow. The logistics industry that enabled Eddie Stobart's rise no longer exists. Deregulation in the 1980s created opportunities for entrepreneurial companies to challenge established operators. That window has closed. The industry has consolidated, barriers to entry have increased, and competitive advantages now derive from scale and technology rather than brand and service quality. Consumer behaviour has shifted in ways that favour large, technology-driven logistics companies over traditional haulers. The rise of e-commerce demands capabilities that Eddie Stobart was never designed to provide. Rebuilding the company around e-commerce logistics would essentially require starting over, competing against established players with enormous resource advantages. The cultural moment that made truck spotting popular has passed. Britain's relationship with trucks and logistics has changed. What once seemed novel and interesting now appears mundane. No amount of marketing can recreate the organic enthusiasm that characterised Eddie Stobart's peak popularity. The financial markets that once valued Eddie Stobart's brand now focus exclusively on profitability and returns. The company's intangible assets, once considered valuable, are largely ignored by investors focused on cash flows and margins. Without market recognition of brand value, Eddie Stobart cannot leverage its heritage to attract capital or talent. The company operates in a market where it is neither the largest, most efficient, most technologically advanced, nor most financially stable player. It occupies a middle position that generates sufficient revenue to survive, but lacks the resources or strategic advantages necessary to grow substantially. Eddie Stobart's glory days emerged from a specific set of circumstances that cannot be recreated. The company caught a cultural wave, built a powerful brand, and dominated an era of British logistics. That era has ended. The green and red lorries still roll across British motorways, but they represent a diminished presence in an industry that has moved far beyond the factors that once made Eddie Stobart special. The legacy remains, but the reign is over. The